It's a bank whose business model thrived on what initially was viewed as unconventional practice in the industry. Equity edging out multinationals in the industry by focusing on the lower cadre of the market and rewriting the country's banking industry script.
One of the things that has helped us as Equity is our agility to change. Our agility to change to meet the changing and dynamic environment and the customer tastes.
But now the bank is walking away from the deliberate and strategic move that placed it at the top tier of the industry. Its CEO, James Mwangi, admitting that the model was no longer tenable, hence they are closing the door on its pivotal unsecured lending.
We're moving away from unsecured because unsecured FIS suggests you use the historical number data, and our NPLs on micros and small has been at 12%, so you need to make general provisions in advance.
This silent move has been necessitated by the need to remain profitable within an interest rate capping regime. The bank posting a 15.5% dip in net interest income for the half-year period ending June 2017 to hit 17.9 billion shillings from 21.2 billion shillings in June last year. Its net profit also dropped by 7.4% to 9.4 billion shillings, a manifestation of the tough times lenders are trading in.
The ordinary Kenyan, particularly with FIS 9s, will never get a loan because they are not priced for their risk, and yet you provide for their risk in advance, and provisions are higher. The risk for the micro is higher than the capping of the interest rate.
But the tough times are not only cutting the bank in Kenya. In South Sudan, Equity says it has further reduced its branch network to 5 from the initial 13 outlets and laid off 200 staff. The subsidiary now on what it calls a maintenance mode,
whereby we just require them to be at break-even point, whereby they are able to pay their costs of operation.
To remain profitable, Equity Bank plans to leverage on fresh business model that puts more emphasis on non-funded income, government lending and digitization, all this to maximize their margins. Patrick Igunza, The Big Question.